Hey investors! Welcome to our deep dive into the top 12 dividend stocks you should consider for your portfolio. These aren't just some fly-by-night companies. No sir, we're talking about the bluest of the blue chips, the companies that have been paying and raising dividends for decades. I'm Jim Cramer, and today we're going to explore some of the best dividend-paying stocks in the market. We're talking about companies with strong track records of profitability, solid balance sheets, and a commitment to returning value to shareholders. These are the kind of companies you want to own for the long haul, the kind of companies that can help you sleep well at night. So buckle up, because we're about to embark on a wild ride through the world of dividends. We're going to break down each company's financials, their competitive landscape, and their future prospects. By the end of this video, you'll have a much better understanding of why these 12 stocks deserve a closer look. First up, we've got Johnson & Johnson, a company that needs no introduction. They've been a cornerstone of the healthcare industry for over a century, and their dividend history is nothing short of legendary. We're talking about 60 consecutive years of dividend increases, folks. That's the kind of consistency that makes a portfolio manager drool. Now, JJ's dividend yield might not be the flashiest at around 2.7%, but remember, it's not just about the yield, it's about the growth. And J&J has a long history of growing that dividend at a healthy clip. They're a cash-generating machine, and they've got a rock-solid balance sheet. Next up is Procter & Gamble, another dividend kingpin. This company is a consumer staples behemoth with brands that are household names around the world. Tide, Crest, Gillette, Pampers, the list goes on and on. They've got pricing power, they've got global reach, and they've got a dividend history that's almost as impressive as JJ's. We're talking 67 straight years of dividend increases, people. And with a yield hovering around 2.5%, P&G offers a compelling combination of income and growth potential. They're constantly innovating, constantly adapting to changing consumer tastes. This is a company that's built to last. Now let's talk about Coca-Cola, the undisputed king of beverages. This company has been refreshing the world for over a century, and their global reach is simply unmatched. They've got a brand portfolio that's the envy of the industry, and their distribution network is second to none. But here's the kicker. Coca-Cola is also a dividend powerhouse. They've been paying a dividend for over 100 years, and they've increased it for 61 consecutive years. With a yield of around 3%, Coca-Cola offers investors a sweet combination of income and stability. Plus, they're constantly evolving their product line to appeal to health-conscious consumers. Next up, we've got PepsiCo, Coca-Cola's arch-rival and another dividend champion. While they might be best known for their namesake beverage, PepsiCo is much more than just a soda company. They've got a massive snack food business with brands like LA's, Doritos, and Quaker Oats. This diversification gives PepsiCo a real edge in the market, and it's reflected in their dividend history. They've increased their dividend for 51 straight years, and with a yield hovering around 2.7%, PepsiCo offers investors a solid stream of income along with the potential for future growth. Now let's talk about McDonald's, the golden arches of the fast food industry. Love them or hate them, you can't deny their global dominance. They've got over 38,000 restaurants in over 100 countries, and they serve millions of customers every single day. But here's the thing, McDonald's is also a dividend machine. They've been paying a dividend for over 40 years, and they've increased it for 46 consecutive years. With a yield of around 2.2%, McDonald's might not have the highest yield on this list, but their consistent growth and global reach make them a compelling choice for dividend investors. Now let's shift gears and talk about Verizon Communications, one of the largest telecommunications companies in the world. They've got a massive network infrastructure, a loyal customer base, and a history of dividend growth that's hard to beat. We're talking 18 straight years of dividend increases, folks, and with a yield of over 7%, Verizon is a true income investor's dream. They're at the forefront of the 5G revolution, and they're well positioned to benefit from the continued growth of mobile data. Next up is AT&T, another telecom giant with a long and storied history. They've been through some ups and downs in recent years, but they're making moves to streamline their business and focus on their core competencies. And here's the good news. AT&T is still a dividend powerhouse. They've increased their dividend for 39 consecutive years, and with a yield of over 5%, they offer investors a juicy income stream. They're investing heavily in their 5G network and their streaming services, which could drive growth in the years to come. Now let's talk about Chevron, one of the world's largest integrated oil and gas companies. They've got operations all over the globe, from oil exploration and production to refining and marketing. And while the energy sector can be volatile, Chevron has a long history of weathering the storms. They've increased their dividend for 36 consecutive years, and with a yield of around 3.5%, Chevron offers investors a compelling combination of income and potential for capital appreciation. They're committed to returning cash to shareholders, and they're well-positioned to benefit from the global energy demand. Next up is ExxonMobil, another energy giant with a global reach. They're one of the largest publicly traded companies in the world, and they've got a long history of profitability and dividend growth. We're talking 40 consecutive years of dividend increases, folks, and with a yield of around 3.3%, ExxonMobil offers investors a solid stream of income, along with the potential for long-term growth. They're investing heavily in new technologies and exploration projects, which could drive future returns. Now let's talk about IBM, a technology icon that's been through a major transformation in recent years. They've shifted their focus to cloud computing, artificial intelligence, and other high-growth areas, and they're starting to see the results. And here's the kicker. IBM is also a dividend aristocrat. They've increased their dividend for 28 consecutive years, and with a yield of over 5%, they offer investors a compelling combination of income and potential for capital appreciation. They're a turnaround story in progress, but their dividend history and their focus on the future make them an intriguing option for dividend investors. Next up is 3M, an industrial conglomerate with a portfolio of over 60,000 products. From Post-it notes to industrial adhesives, 3M's products are ubiquitous and their commitment to innovation is unmatched. But here's the thing, 3M is also a dividend king. They've increased their dividend for 65 consecutive years, and with a yield of around 5.5%, they offer investors a substantial income stream, along with the potential for long-term growth. They're a diversified company with a global reach, and they're well-positioned to benefit from the continued growth of the global economy. Finally, let's talk about Pfizer, one of the world's largest pharmaceutical companies. They've been at the forefront of the fight against COVID-19, and their vaccines have been distributed around the globe. But Pfizer is more than just a vaccine company. They've got a broad portfolio of blockbuster drugs, and they're constantly investing in research and development to bring new treatments to market. And here's the kicker. Pfizer is also a dividend champion. They've increased their dividend for 13 consecutive years, and with a yield of around 4%, they offer investors a solid income stream, along with the potential for capital appreciation. They're a leader in the pharmaceutical industry, and they're well-positioned for continued growth in the years to come. Thanks for joining me on this analysis of the top 12 dividend stocks. These companies represent a diverse range of industries, but they all share one thing in common: a commitment to returning value to shareholders through dividends. Remember, always do your own research before making any investment decisions. These are just a starting point, and it's important to dig deeper into each company's financials, their competitive landscape, and their future prospects. Stay tuned for more insights and happy investing.